Welcome to Policy on Demand. I'm Sindhu Blume.
And I'm Scott McCandless. We're now 4 weeks into the federal government shutdown, with Congress still deadlocked over funding for FY 2026, which began October 1st. The Senate is expected back today and may take another vote on the House's short-term funding bill that would keep the government open through November 21st. The House has not been in session since September 19th.
So, Scott, our colleague Andrew Pryor said this morning that this is going to be a trade-forward week.
Correct.
So why don't we start there?
Sure.
What's going on?
Sure. So, Sindhu, President Trump is expected to meet on Thursday with Chinese President Xi Jinping to try to reach a trade agreement. The hope is that an agreement could avert further U.S. tariffs on Chinese imports, which would go into effect on November 10th, creating some pressure to reach a deal this week. And staying on the topic of trade, today we're going to talk about the latest customs and trade developments in a conversation filmed at PwC's Global Transfer Pricing, Trade, and Indirect Tax Conference in Prague. Sindhu, you were there last week and the team filmed a number of episodes, and we're about to watch one conversation. Could you help tee it up?
Sure. So the conference was last week, and I want to point out some themes that ran through it. One was navigating tax and trade, of course, which a lot of companies are doing. AI, Pillar 2, new technologies, and insights and data and how those are used. Now, the conversation we're about to watch is focused on IEEPA with Desmond and Kristin Bohl. And we have a host of other episodes that are going to be on our website or will be going out via email. So let's listen to the conversation.
And there's a lot of things evolving when it comes to the customs and trade environment. We could spend a whole hour episode on that. But there is one thing looming coming out in the future from a U.S. perspective, and it's this term called IEEPA, Supreme Court, and some amount of tariffs. Like, you and I nerded out on an analysis that we actually had published in an insight that we'll include in the show notes. But can you kind of give an overview of what is kind of potentially this Supreme Court case? It's going to start on what, November 5th?
That's right. So everybody by this time has heard about the IEEPA tariffs, and that issue as to whether the administration has the authority to pass those tariffs is currently in front of the U.S. Supreme Court. And as you said, on November 5th, they're going to be hearing oral arguments on that. Whether or not the Supreme Court says those are legal is a huge issue for our clients because, as you and I nerded out on the issue, we have done the work to estimate how much of IEEPA tariffs have actually been paid by companies over the past several months, and it's over $100 billion.
So it's last several months, so I think it's the time period, it's like February of 2025, that's when it was announced, 30-day delay, going into effect in March, so like March to October 31st, that's the time period we're focused on.
That's correct.
How much was the big number?
It's over $100 billion.
$100 billion.
That's what's on the table for companies to potentially go get in refunds if the Supreme Court ultimately says these tariffs are unlawful. It's a huge number. And so companies are out there asking, how do I go out there and attack that?
And that's the question. Like, let's like, the lottery's been won. If by chance they're deemed to be completely illegal for that period of time, and I'm assuming it's a piece in time, we'll get into why in that in a moment. But if that process happens where companies are like, we need to go get refunds, what are the options?
So there's the knowns and then there's the unknowns. Yeah. There's a couple different mechanisms that may be available to importers, and those are the knowns. We know things like post-summary corrections and filing protests. Those are mechanisms that have been in place for eons, and companies use them all the time to go back and amend or fix customs entries. But then there's the unknowns. It may very well be that for this IEEPA refund process, the government puts forth an entirely new process for going to get those. And between you and me, Chris, we know the government isn't going to make it easy, right? So what should companies be doing right now? They should be starting right now, even before we know the outcome, gathering their data, gathering their documentation, so those things are lined up. Because when that process gets set forth, you don't want to be the 100th company in line. You want to be the first company.
And I imagine, let's pretend that that does happen where they're deemed to be illegal. And all of the C-suite's going to look at this saying, cha-ching, we're going to have this windfall of money. I'm going to book it right now. I'm going to make it a receivable. But then they're going to hear about this potential delay or challenge or this process that's going to be so onerous that they're not going to be able to do it. It's probably going to bring a lot of frustration in the market.
Absolutely. I think companies right now are facing the uncertainty not only of the outcome of the case, but not knowing the mechanism to potentially go get those things. But that's why it's even more important to gather the information we know will ultimately be needed, the data and the documentation to support it.
So we're at the Global Transfer Pricing and Customs Conference. There's also a transfer pricing spin to this too, because if, let's say, companies do get these refunds, then the question becomes, from a transfer pricing perspective, what should they do or shouldn't they do? Did they change their policies? Do they make adjustments for their policies because of this? Not to mention, if these refunds are given, and let's say a company receives a refund of, call it, $10 million, and they've already had deals with their suppliers, either related or unrelated, and all of a sudden they've helped share the tariff costs, or even imagine what the customer aspect of it is going to be, because now these customers have been communicated, oh, we've had a 10% markup on our products to you, and then we heard you got the refund, how are we going to get that? What a mess.
It's a huge mess. We don't yet know how that's all going to play out. That's part of the uncertainty, but you can certainly imagine customers who've had the tariff costs passed on to them, they're going to be looking to get their piece of that refund pie.
Thank you, Kristin. Again, really amazing job.
Thanks for having me, Chris.
Sindhu, that was a great conversation about IEEPA as you teed it up. But you said there was a second trade discussion. Could you also discuss that one?
Yes. So this next piece is about USMCA. And I had an opportunity to speak with Yamel, Cado, a Mexico partner, and Martha Goncalves, a Canada partner. Here's what they had to say.
I would say the Canadian government's already opened up consultation period. It started on September 30th and lasts until November 3rd. So I would suggest Canadian companies get their voices heard and get those consultations or get their insights that they have of what they want to the Canadian government. So Global Affairs will take that list of ideas, suggestions, recommendations, create a list and build it and give it off to their negotiating team. But I really suggest to get a collective voice. Companies should look to industry associations so that they can have that collective voice so that they can really ensure that their needs are met.
Mexico is doing the same thing. It's starting consultations through the Ministry of Economy. It's starting September 17th. So right now, chambers and associations are going through citizens and organizations and companies to get together for what the interests are, what they are looking for. And I would say that one of the main interests is to have certainty. What they are asking for is, if they are going to negotiate rules of origin, for example, they need to be followed since the beginning to the end of the agreement. So obviously, there are certain topics that will be discussed in these consultations, and we are hoping that the voices come together for a better interest for the USMCA to be renegotiated in July.
So Scott, following up on those comments, what are American companies doing?
Sure, American companies remain very focused on trade. Obviously, this is a big week and we should potentially see some favorable movement. I think the markets are already anticipating a little bit of that. But they're also focused a little bit on what's going on in the broader economy. So we have one down note, which is that with the ongoing government shutdown, we're not getting some government reports. So we might not see the GDP report that we would otherwise see, and that might be a little bit frustrating. At the same time, the markets are anticipating a Federal Reserve rate cut potentially coming this week when they meet on Wednesday. So we're going to watch that. So there are a lot of moving pieces here that seem to portend some favorable market news, especially if we get a deal from the Asia discussions when President Trump is over at APEC. If that happens, then I think we will continue to see a little bit more of a rosy outlook. But if not, then we could continue to have some bumpy times in the markets. Trade will remain a focus, as we heard this morning.
Scott, thanks so much for that.
And for our viewers, a link to episodes from meetings in Prague are included under the Transfer Pricing channel on the Policy on Demand website, which is linked in these show notes.
And thank you as always for spending this time with us. Have a great week.